We start today's market talk. The week didn't go along on expected lines. That is the last week. Too much of volatility and differential moves between Nifty and Nifty Bank. So, in the words of James Bond, the sentiment which was accruing in last to last week, where Nifty had gone to 23,000, was stirred but not shaken. Some people book profits. FIs have carried some short positions, but let's see what happens next week. Market outlook: all eyes will be on election results on Tuesday, that is June 4th. Market had turned skittish, worrying whether BJP will come back with decent majority and all, and will continue with business friendly policies and all that. So let's see how it plays out next week. The key issue last week was S&P upgraded India's sovereign credit rating outlook from BB minus stable to BB minus positive. So what is the net result is that they have said that if policy stability continues, economic reforms become bigger, there is a high infra investment, high growth with cautious fiscal and monetary policy, it could lead to another rating upgrade over 24 months. They have given two yardsticks: central government debt to fall below 7% of GDP, inflation to be managed at a lower rate for longer time. Now, that would be a big trigger because that will reduce the cost of borrowing for all people abroad. Now, the other issue is politicians, when in power, will be forced into embracing pragmatism and progressive economic policies. So, we have seen while politics seems always to be challenging to investor interests, it has never really hurt investors in post liberalization India. And people are waiting to deploy money right now, and that will distort valuations in the first few weeks of the new government. But the real game, I think, will begin with budget. Now, I said that we'll cover some themes for next 5 years or so. So the process of supply chain reconfiguration is a medium-term trend, and real changes are likely to be visible over the next 3 to 5 years. Now, geopolitics has created a window of opportunity for India and a second chance to catch up on the missed manufacturing bus. India has received most interest from firms which are shifting their business now from China regarding setting up or expanding production facilities in basically automobiles, components, electronics, some interest in capital goods, consumer durables, and semiconductor sectors. Now, you would see a strong momentum in stocks linked to domestic manufacturing theme if the same business policies continue. So, government is interested to turn India into a global manufacturing hub through incentives and reforms. So, create a make in India small case of defense, electronic manufacturing services, power, renewable stocks, etc., and then stay invested with that for 4 5 years. New trends are emerging from renewable energy to artificial intelligence, but the one that can't be missed is India's digital journey. Now, a lot of stocks would be beneficial of India's digital journey. Anywhere where the payment is concerned, where all the startups, all the quick commerce, everything is part of that. Now, India's digital public infrastructure has grown rapidly and has played a key role in formalization of economy. Now, there are some very good stocks. Unfortunately, they are not doing well. One of them is Protean. It is involved in tax service, NPS, identity service. It is getting into ONDC, data account aggregator, cloud, and info security services. So once it turns around, all such stocks which are involved in these kind of things will do well. I'll show you the Nifty option chain just to understand the point. So if you see here, this is for 6 June expiry. So this is at the money level. So if you see here, maximum call writing is at 23,000 and maximum put writing is at 22,000. But if you see here, there is lot of call writing above the current levels. So if at least on Monday at least, all these guys will be covering. And they would be forced to cover their position. So that will lead to a further movement in the stock prices and the index. Now, if you see here, at 23,500, see the call writing, at 24,000 call writing, and at 24,500 call writing, and 24,700 call writing. So the total, if you see, OI wise, put side and call size, the PCR is 0.76. Below 0.7, it becomes oversold. So there are a lot of positions which people have taken as a kind of a hedge on the by writing calls. So they would be covering these positions very quickly because they would be getting into the money very quickly as the index goes up. Okay, now talking about Indian government 10-year yield, if you see here, because of this upgrade, now the yield has come down to 6.9 and it has come below the 200 EMA, which was at 7. So as these yields will go down, the bond prices will go up. So a GSEC portfolio will definitely do well from here. Now talking about US, in the US markets, bonds rallied and the yields were lower as Jerome Powell downplayed the possibility of interest rate hikes, and Fed said that it will shrink its balance sheet at a slower pace to ease strains on money market. Dow climbed 574 points on Friday, lifted by Salesforce, which had corrected 20%, so it went up 7%, and United Health, while Nasdaq was down due to Nvidia and mega tech stocks correcting because they have run up a lot. But the key issue was that the core personal consumption expenditure, that is PCE price index, increased 0.2% in April as per expectations. So core PCE rose 2.8% on annualized basis, slightly higher than 2.7%, which was predicted. Hence, if you see here for the last week, at the end, the bond yields came down below 4.5. So in case the Fed is dovish and the commentary is dovish, it can go down further. So right now it was correcting and then again started going on. It is totally data dependent. Dollar index, now again it was started going up. Now it has come down to around 104 levels. So moment it goes down further, it will be good for all the commodities and all the emerging market currencies. Brent crude, again, it has corrected last week, but there is a OPEC meeting scheduled, I think, in next 1 or 2 days. So that will decide what is their production policy and all that. But it is trending downward. So it will break. If once it breaks this trend line, it will correct a bit more. Gold, now it has started correcting because I think the buying has reduced and the prices are very expensive. So wait for it to come down to this 20 EMA and 50 EMA. So in case you are looking to buy. Now Nasdaq had a red candle last week. So it corrected after Nvidia had gone up and it had gone to all-time high. It has corrected below the rising trend line. So we'll have to see if it takes support at this 20 EMA and then bounce back again. Now, last week, the copper futures corrected in a big way. So they have come down to 4.6 again, based on all the demand and supply issues. So, but this is likely to do well over a longer period of time. So this should do well. Now, India VIX, if you see, it corrected last, say this is a daily chart. So if you see on Friday also, it corrected and then it bounced back. So it came down below 23 and then bounced back. But the point here is it has risen from 10 to 24 and it will fall drastically. So what is happening is that even if you have bought calls and market opens 500 points also up, say Nifty, your premiums will not go up much because the VIX will correct. So once this VIX falls to below 20 and all that, so the premiums will actually fall. So point is, and it will keep falling now as the clarity on political continuity will increase. Hence, all those who have carried call options or after buying call options or by buying put options should square off as early as possible, because premiums will decline in a big way as the VIX corrects. That is for Monday. Now, Nifty, if you see here, this is a weekly chart. Now, last week, it made a fresh high, went above 23,000, and then corrected in a big way and made a kind of a bearish engulfing candle. So this was negative, but now it is expected to do better. So it has closed somewhere around 22,500. So expecting a 2% gap up, it is expected to open around 23,000 odd from here. Now let's see in the daily chart. So if you see here, 5 red candles, and it has closed below the 20 EMA, that is the Nifty. So the probability is that after this good exit polls, this from 22,500 will open around 23,000, then make correct and take support at 22,800 and all that. And that is the level where the premiums would have declined and all that. So from that is the time to go long, and not go long on opening only tomorrow in case you are trading. So that is the point. And after that, this level should hold. Once it tests that level, after that we will see how the things plays out, whether there is a profit booking tomorrow or not. Nobody knows. And then subsequently what happens on 4th, that will decide the subsequent trajectory. This is the hourly chart. So if you see here, from over the whole week, last week, the Nifty was correcting, and it is below the 20 and 50 hourly moving averages. So it was weak. So it closed at around 22,500 odd. So it showed 550, sorry, it closed at 22,550. So it showed the weakness. So from weekly, daily, and hourly charts, it is showing weakness. So now everything can change very quickly. Now Nifty Bank on the weekly chart had kind of a doji. It went up. It was moving at divergence from the Nifty Bank, and subsequently it corrected. So it can go in any direction from here. But if you see here, this is a daily chart. So it had 2 red candles and 2 green candles, and generally closed at similar levels at it last week. So what will happen here is that it's closed at around 48,983. That is roughly 49,000 level. So it may open around 50,000, then correct and take support at generally around these levels where it had earlier also taken support, and then we will see subsequent action from here. So this is what it is, and it will all depend on FI action also, Nifty Bank, because the major portion or the major impact is of HDFC Bank. Now, if you see HDFC Bank, it has taken support at its declining trend line and has gone up. So it made to and fro movement last week. So if it has to show strength, it has to first trade above this 1550, 1560 level. That is the resistance which I brought out last week also. It tried to go there and correct it. So once it crosses that, then it will go through this gap at 1600 and then above. But the point here is that this is directly related to the FI buying. So if FIs come back, they cover their shorts and all that. So expect a rally in HDFC Bank. Similarly with Reliance, last week it corrected, made a big red candle, and it took support at 20 EMA, somewhere around 2840 odd levels, and has closed at 2860. So it has to cross this 3000 level and then trade above that. So if it crosses this 3000 level and trades above that, then this should become a base for it. But it should trade above this for 1 or 2 days. But as the gap up will take place and FI money will come in now as expected, so then this should go up. Now, the stock which was in divergence last week was Adani Enterprise. So if you see here, it had a big red candle last week, or green candle, sorry, last week, when it went above the declining trend line. Then it corrected, somewhere took support at the declining trend line, And then on Friday, it again had a big green candle. So one has to just watch this stock now because it's too volatile right now. So that is the thing, but definitely the trend is positive and the relative strength is also good. This is a daily chart. So that's what I wanted to show, the volatility. It went up and made a high of around 3450 and then came down all the way to 3150. This is very volatile stock. Now the Midcap index last week made a high and then corrected. So the red candle was bigger than the previous week's green candle. So I think mid-caps should get some momentum now. Similarly, small caps, it again corrected from that all-time high. So we'll have to watch this, but till the time it is above 20 EMA on the weekly chart, they should do well. Now I'll cover three stocks today. The first stock I'm covering is Jkumar Infra. As of 31st March 24, the company's order book stood at 21,000 odd crores, including L1 of 4,700 crore Virar Alibag multi-modal corridor and Harinagar building. Total order book now stands at 25,711 crore, which is 5x of FY24 revenue. They do around 5,000 crore of revenue as of FY24. So they have roughly 5x of 25/24 revenue, and they are getting contracts roughly around 10 to 11,000 crore per year. The company expects EBITDA margins to trend higher in FY26 from current 14 to 15% to 15 to 16% range, backed by efficient project execution and accretion of more orders. 39% of total order book is from elevated corridors, flyovers, 24% from roads and road tunnels, 15% from metros, elevated, 12% from metro underground, 6% from civil and others, and 5% from water. Geography-wise, 65% from Maharashtra, 19% from Tamil Nadu, 10% from NCR, 3% from Gujarat, 3% from UP, and 1% from Karnataka. They are basically doing a lot of projects in Mumbai. Estimate Jkumar Infra to report revenue, EBITDA, and PAT, that is profit after tax, CAGR of 17, 19, and 22% respectively over FY24 to FY26. EBITDA margins to trend higher in FY26 from present one, which I have told you also, due to efficient project execution and accretion of more orders. Now, if you see their quarterly results, this is Q4. So it had a revenue growth of 17% year on year, Q on Q, and 26% year on year. The EBITDA is up 13% Q on Q and 27% year on year, and margins are relatively in that 14% plus category. And profit after tax is up 26% year on year and 17% Q on Q. And if you see, this is their net sales. So they are doing around 5,000 crore of sales in a year and making a profit of around 329. So this profit, this sales and profit are expected to go up 10-15%, and profit approximately, you can say 20%. So they're expected to 391 crore and 490 crore in FY26 as the project execution will take place. So if you see the growth indicators and ratios, sales growth is expected for FY26 18%, profit growth of 25%, EBITDA margin of 15%, debt to equity is low and manageable 0.2, EPS around 65, and ROE around 15%. So the PE as on presently is around 10-11 only. It actually, this is a chart. I was expecting to buy it after the results, and it shot up on Friday. So it's still cheap. It's at around 10 to 12 PE, and right now trading at 755. So every dip is a buying opportunity in this stock because of good execution and good projects. Though it is slightly overbought right now, it's because it just went up on one day with very high volumes. So keep this in horizon. Next one is Hindalco. I basically wanted to cover because it will give you a clear idea on AB Aditya Birla Group. Now, Hindalco's Indian operations delivered a robust performance. Overall, consolidated revenue stood largely in line, flat year-on-year, up 6.6% Q-on-Q, while reported EBITDA grew by 24%, 14% year-on-year and Q-on-Q, 10% beat versus estimates led by strong upstream aluminum and copper division. Now, in aluminum, upstream is mining and refining, and downstream is smelting, casting, and fabricating. So, upstream means mining and refining is giving the momentum, and copper, because the LME copper prices are high. PAT increased by 32% and 36% year-on-year to 3174 crore, led by higher EBITDA. Both copper and aluminum pricing is expected to remain strong and have now recovered from the bottoms of calendar year 23. Hence, the pricing effect should reflect in the company's performance for the year. Backward integration to help raw material supply and price volatility for aluminum upstream business. Backward integration is they are now getting into producing their own coal and mining, etc., so as to reduce their cost. Total coal requirement for on annual basis is 16 million tons per annum. The Chakla and Meenakshi coal mines are expected to be operational by end of FY26. The cost saving effect from these will be reflected from FY27 onwards. It is determined to improve its value-added products mix to gain higher margins, especially in its Indian aluminum business. They are not taking projects below mid-teen IRR. Novalis reported a strong operational performance with EBITDA per ton of $540 per ton. Indian aluminum business remained strong due to favorable macros and the company's cost efficiencies. The upstream business reported an EBITDA per ton of 967 per ton, up 17% year-on-year. Copper business saw higher demand, thereby a rise in company shipment, which is reflected of the performance. EBITDA of the business was up 30% year-on-year to 776 crore. US growth to accelerate, Eurozone to gradually pick up, and moderate economic growth in China expected in 2024. Company will be opening 2 mines, one alumina refinery, which would be requiring substantial capex. The health of the balance sheet allows undertaking these projects without resorting to debt. On the copper front, Hindalco is currently focused on increasing the copper rods capacity. No plan to enter the copper wire business segment. Capex, they are planning to do around 6,000 crore in FY25. Novalis plans to raise up to $945 million, that is roughly 8,000 crore, through a IPO as it prepares for its stock market debut on New York Stock Exchange. Now, this is an offer for sale from Hindalco, so all the money will come to Hindalco. And now, since the Vodafone problem is over, so that scared that this money will go into Vodafone is not there. This money is coming to Hindalco, which probably they will use to develop their operations. Now, if you see their quarterly snapshot, this is this quarter. The revenues were mostly flat, just Q-on-Q up 6%, but the margins were up. EBITDA margins was higher by around 8.7%, leading to EBITDA year-on-year being higher by 24% and Q-on-Q 14%, which led to a Q-on-Q increase of 36.2% in profit and 31.6% in profit. So they have become more efficient by reducing their cost and other expenses. So if you see, employee cost has gone down and things are improving as such for them. Now, if you see here, this is their segmental revenue. So aluminium, if you see here, total expenditures dropped by 3%, so which helped in... Just switch off your volumes. So, okay. So, and it was better than estimate because their expenses had gone down. Total expenditure went down. EBITDA, if you see here, this revenues are higher for aluminum and copper by 36 and 24%. EBITDA is higher for all. EBITDA margins is up to 50 basis points. Profit was up 32%. Net debt is down 7%. They have been able to pay debt. So Novelis adjusted EBITDA is up 25%. Upstream EBITDA per ton is EBITDA per ton for aluminium is 17% and downstream is up 14%. So overall there is an efficiency and the business is expected to grow. So if you see their future estimates, the revenue is expected to grow 10 to 15% per year from FY25, FY26. EBITDA is improving, so it will be in the range of 12% because of better efficiency and operational efficiency. Hence, the profit will be higher by around 25 to 30%. So this should lead to re-rating of this stock. Now, key ratios, if you see here, PAT up 27% and expected to be for FY26 around 23%. EBITDA margins higher. ROE is now reaching double digit comfortably, maybe 11.8. It's expected to do around 71 odd rupees of EPS in FY26. So it is still below 10 times present valuation. So let's see the chart. So if you see here, it has made a low of around 500 and then has gone up very gradually from there. And it's still at around 689. So it is relatively cheap as with the IPO and other things, and cost of doing business is going up, EBITDA is going up, margins are becoming better, profit is expected to go up and all that. So it's at a very attractive place right now with so much of interest in metals and the higher prices of metals. Now the other stock is 3M India. It's again a very interesting stock. It's a subsidiary of 3M Co. It's an industrial equipment company. It carries out design, manufacture, and distributes specialized tools and services for diverse markets. It manufactures, markets various products and provides services to industrial, transportation, and electronics, healthcare, display, graphics, consumer office, and supply markets in India. Some of the major brands include Scotch-Brite, Scotch. That is not the Scotch. It is basically a tape. A tape which is used in wiring and other things. Nextcare, Command, Litman, and Post-it. 3M India reported revenue, EBITDA, and PAT growth of 4.6, 10.3, and 27.4% respectively. So the PAT and EBITDA growth is better. Gross margin expanded 121 basis points on correction in input prices and change in revenue mix. Segment-wise revenue growth rates: healthcare up 18.8%, consumer up 6.8%, safety and industrial minus 1.6%, and transportation and electronics up 3.6%. EBIT margins of healthcare and safety and industrial segment expanded, but that of transportation and electronics and consumer declined. Healthcare segment, after year-on-year revenue decline in Q3, has reported robust growth in Q4. The company has announced a total dividend per share of 685, including special dividend of 525 per share. Now, if you see their P&L, the revenue was up 4.6. So roughly they did around 1,094 crore of revenue. This is in millions. So up around 4.6, and Q on Q, it was up 8.8%. For FY24, it was up around 5.8%. Margins have improved Q and Q and year on year, which is leading to increase in profit before tax by 25% and profit after tax by 27%. So the PAT has improved by around 27% because of better margins and normal growth in the business. So if you see here, they are expected to increase their sale by 15 to 20% over the next 2 years. Margins are going to remain at this 17-18 levels, and profit is also improving. If you see here, PAT, it is roughly improving by 10 to 15% over the next few years. So the reported EPS is 635. So 635, it has always traded at around 50, 60 P. So at 60 P, can easily trade at around 39,000, 40,000 odd levels. Net sales are growing at around 14-15%, as I said. EPS is growing. EPS is growth is around 8.9% over the next 2 years, 12 and then 8.9. So the valuations are now at lower end of its range because of the certainty of the business. Gross profit margins are good, around 40%. EBITDA margins around 17%. Net debt to equity is negative because they are cash rich. ROCE 28%, ROE 31%, return on invested capital 88%. So a very efficient way of working. So if you see here segment-wise performance, if you see here segment-wise revenue, the maximum revenue is coming from transportation and electronics, which is growing less, around 3.6, but the one which is growing the fastest is healthcare, 18.8. As percentage of total, 41% is transportation and electronics. EBIT also, transportation and electronics was roughly 1,000 crore out of 2,000 crore. 200 crore. This is in millions. As percentage-wise, it was 51% is transportation and electronics, and margins-wise, this is key. Transportation and electronics is around 22%, and overall is around 18%. So the margins of the highest segment is the best. So till now, they are having decent revenues, and growth is now coming down. They had a good growth after the COVID thing, and now it is coming down to that basic single-digit level. But margins have improved. PAT margins and EBITDA margins are improving on the way up. So what is expectation is that the revenue was growing at around 10% CAGR. It will grow at 14% now from here. EBITDA margins will also be on the higher. That is one standard deviation above the mean of around 17. PAT growth again will grow up with a CAGR of 10.7% over the next few years, and ROE, ROC will be again higher at around 30 plus. So that is what is keeping this stock excited. Net working capital days are going down, so their requirement of borrowing will reduce. So, and their cash management is becoming better, and operating cash flow and EBITDA per EBITDA is improving. So that is good. Now, if you see here, this stock had over a period of time corrected in 2024. It had corrected over a period of time, and now it has gone up. And if you see here, the 20 EMA has now crossed through all the other moving averages. So it is on momentum now. If you can get it on the dips, it can go up to this 39,000, 40,000 levels very quickly based on the relative valuations and if you see here, last few days we have seen very high volume. So generally on high volumes only it goes up, makes fresh level. So just keep this stock in radar. I have finished. We'll take questions now.